guys, this is Hassan from HTFX, and I would like to update my idea on gold, okay? Now, when I did this first analysis, the gold was around, when the first one I did, it was around 1700s or so. We did go all the way up to, well, you know how much it did. So it was a good analysis overall. However, I had to change it along the way. There was a mistake here that I did, which didn't change. It doesn't change the overall picture, but you have to, when you make an analysis on Elliott wave, okay, you have to always adjust it, okay. So this is what it was the last time we let it go, okay. So the problem in this the problem in this chart was with the second wave, which we fixed actually. So now this is an idea. Okay, this is a concept that many people don't use so much because this was a concept introduced by Glenn Neely. Okay. Now the idea is this: whenever you feel like you have an impulsive wave, it usually does look like this. So you have a 1, 2, 3, and a 4. Okay, maybe I did explain this many times before, but for those who didn't watch my videos before, maybe this will get your attention and you would like to see it. So this is a usual an impulsive wave looks like. Okay, this is an impulsive wave with a third wave that is extended. Okay, sometimes you can have a second wave or a fourth wave. Okay, that even though it is a retracement of this, it can sometimes end on higher than the first wave. This is a concept that is called running corrections. Okay, the running corrections can take place on the second wave, on the fourth wave, or on the B wave of a flat or a zigzag. Okay, now in my defense, now these are very hard. Why these are very hard to find? Because they're almost impossible to predict. Okay, so you can only understand that it is a running correction, or you can only think like this after the fact. What I mean by after the fact, well, I mean after it's already been done. Okay, and this was no exception. So of course, after this first wave, if it was a truth, you would immediately assume that this is the second wave, this is the third wave, and that this. Well, but in this case, as you can see, the market it continues higher. Okay, it continues higher without a really big pullback. And if it was a second wave, was a third wave. Okay, there's no extension first. When there's no extension, you don't have an impulsive wave. So this cannot be the wave of second wave, but it can only be a part of the second wave. Now, as you can see, the second wave ends on top of the first wave. Hence, the idea comes from the running correction. Well, cool. Well, can I just put the running correction anywhere I want and go away with it? Well, no, you cannot. There's another problem in this thing. Now, the thing that I don't like about discount, even though it turned out to be on our right side, is the fact that you have to draw your 0 to be 0 to 2 trend line, okay, which in our case is this, and no part of the third wave, which as you can see here, this is the part of the third wave. The rule says no part of the third wave can actually break this 2 to 4 trend line. Now if this was the only break, I could say okay, it's fine, it's like this COVID times, but in here we have pretty big actually problem here. It did actually break this 2 to 0 to 0 to 2 trend line. So that is real. I have a problem with this. But of course, when this happened, we were already it was already in so much profit. for this analysis, if I did actually put my money on FX to this, I would have closed my position. Okay, but yet the analysis somehow still works. Okay, which is interesting. Now, if this is the second wave, it means that we are going for the third wave. If we are going for the third wave, it means that on one lower degree, which actually is not at this one, okay, this is the mistake also, is to this one. So it looks like it can be something like this. Second wave and a third wave, okay, and it looks like we may be on a fourth wave, okay. If that's the fourth wave, and we will have a fifth wave, that should be here like this. But um, we still have trouble. Also, but I actually think that is why I will not go with this scenario, because then there's another break here. Okay, and if that's the idea of okay for me, but I would rather think that this is it. This is third wave, so fourth wave, and this is the end of the third wave. If this is the end of the third wave, it means that we are on the fourth wave. So any pullback, as long as it doesn't come to the territory of the second wave, is fine. So it looks like we are on somehow on this. Now, what I would like to do, actually, let's get rid of this stuff because I did show this to you before already. Now, what I would like to see is, do we have an extension or no? Well, this is the first length of the first wave, and this is the length of the so-called fifth wave. So this is the length of fifth wave. What we need is 161.8. If we have 161.8, it means that we have an extension. So what we should do is take 161.8 and put it on our second wave. As you can see, our third wave is a little bit larger, which is good, which it means that we can have 1, 2, 3, 4, 5 as an impulsive wave right here. And when you draw the, well, maybe, yes, it can work like this. It can be a little bit, it can be from here as well, okay, which you still have the extension, by the way. But I am not so sure if this is the end of the second wave or this. This is where I made mistake. And actually, let's do a better job again to change it. Okay. Yeah. Let's take 161.8 again because I accidentally changed it a little bit. Okay. And put it to here. Okay. As you can see, we still have the extension. So what I should do is I should draw to 4 trend line. My bad. And it's good. Look, it has been broken in due time, which is good. If that's the third wave, it means that we are on the fourth wave. Now on the fourth wave, you can actually have a triangle here, okay? That is it usually happens. If that's the case, it may look like this. So D wave and a C wave and some type of an E wave. If this is the case, which this move does look like a triangle, then we should see it finishing. When it does finish, if this triangle will break again to the upside, okay, this is how it should be, then what I would do is look for one thing, which will tell you. And look, to be able to make this analysis, you have to go back all the way to the first wave. Why? Well, this is the length of the first wave. Okay, and I will take this length. Okay, and I will put it, let's say it finishes here. Now, why it's important? Well, usually you will have a fifth wave that is some type, it has a Fibonacci relation between the first wave and the fifth. Look, if we will take this 618 and let's say that it ends here, okay, look, we don't make a new high, then we have a problem. Then it means we will most likely to have 10618. Okay, now that should be a more ideal thing. But look, you cannot just think that you have 161.8 and have this one. Now why? Well, because you need an extension in this. So this target of 106.18 is not visible. It's not feasible, okay, in this form. Why? Because if I put this here and if I take 161.8 out of this, okay, look, we don't have an extension here. We do not have an extension here. It means that this cannot be 106.18 out of this wave, okay? So what I would think, then we may have a one-to-one, maybe a little bit smaller, maybe a little bit bigger. If that's the case, even if this whole concept doesn't work, we should make a new high if this impulse wave still is, if it still makes sense, okay? But here is where you should scratch your head a little bit of this break here of the 0 to 2 trend line. I don't like this. Part of third wave should not break it, but it's still it can happen. I mean, it can still work, okay? But this is the part I don't like. But other than that, the analysis, even though I know it's like a little bit confusing, it actually makes sense. It really does. And that's about it, guys. We should be here soon. Even this can be the wave E, by the way. But no, this cannot be the wave E. Why? Let me tell you again. If that's the wave D, we may be looking for wave D now. Okay, maybe this is not the wave D. Maybe this will be the wave D. So I may adjust the trend line. Okay, this can happen. But when the moment that this, I will understand this triangle is over, if this is a triangle, of course, then then I would be looking for longs. But will I take the trade or no? I don't know. As you know, we don't give any financial advice here. This is an educational purpose only video. So I hope this makes sense though. Okay, guys? Thank you so much and see you on the next one.